Crypto tokens climb as investors, hopeful for friendlier U.S. regulation in 2025. As 2025 unfolds, crypto tokens are experiencing a surge, fueled by growing investor optimism that the U.S. will adopt friendlier regulatory frameworks for digital assets. This hopeful outlook is driving up prices across many cryptocurrencies, with investors betting on a more supportive regulatory environment that will help propel the industry forward. Key factors driving the rally. 1. Anticipation of clearer regulations. Clarity is key. Investors are eagerly awaiting clearer guidelines on how cryptocurrencies will be regulated in the U.S. In 2024, many were concerned about the lack of a defined legal framework, but 2025 could be the year that the U.S. government provides much-needed clarity. Clearer regulations could encourage institutional investors, reduce compliance concerns for crypto businesses, and lead to more widespread adoption. Positive signals. Regulatory bodies, including the SEC and CFTC, have started signaling that they are open to working with crypto companies. A more collaborative regulatory approach could lead to more innovative financial products and clearer paths for blockchain integration in mainstream finance. 2. Potential for ETF approvals. ETF momentum, the approval of crypto exchange-traded funds, ETFs, in 2025 could be a major catalyst. Several Bitcoin and Ethereum ETFs are already under consideration, and successful approval could open the floodgates for retail and institutional investments alike. This would make it easier for investors to gain exposure to digital assets without directly purchasing or managing crypto. 3. Growing institutional interest. With signs of a more favorable regulatory stance, major financial institutions are becoming increasingly bullish on cryptocurrencies. JP Morgan, Goldman Sachs, and Fidelity are all expanding their crypto-related offerings. As regulations become more predictable, even more institutions may jump into the market, fueling further price increases. 4. Supportive legislation from Congress. Some U.S. lawmakers are pushing for cryptocurrency-friendly policies, advocating for tax reforms and other legislative changes that could reduce the burden on crypto companies and users. Proposals to treat digital assets more like commodities rather than securities could help streamline the regulatory process. 5. Global competition for crypto innovation. The U.S. faces stiff competition from other countries that are already embracing crypto and blockchain technology, such as Switzerland, Singapore, and the UAE. In 2025, the pressure will be on U.S. regulators to adopt policies that will keep the country at the forefront of digital asset innovation, encouraging a more pro-business approach to crypto regulation. The impact on crypto prices. With Bitcoin, Ethereum, and other major cryptocurrencies often responding positively to regulatory news, the hope for friendlier U.S. regulations is sparking a bullish trend. As more institutional money flows into the space and retail investors grow more confident, prices could continue to rise, making 2025 a potentially lucrative year for those holding on to digital assets. The outlook for cryptocurrencies in 2025 is looking brighter as the U.S. appears poised to implement more favorable regulations. This renewed optimism is driving up the prices of many crypto tokens, with investors hoping that clearer rules and a more supportive legal environment will unlock even greater potential for growth. If these regulatory hopes are realized, we could be looking at a monumental year for the crypto market.